Hello. Let's see if we can correct this lighting. Hi, Mihaela. You look beautiful.
You as well. You have your hair a little longer.
Oh, glary.
You're a
Too
little bit,
glary.
yeah, blurry,
There we go.
blurry, shady.
Carla, can you hear me?
Yeah, I can hear you.
Good. Trying to get this to not be so glary.
To mute my phones. Since it is fun with a lot of phones and things and madness. And
I'm glad Chaz is here because she's the one that I really want to hear this. And Carla, too. Both of you are aligned for what
Yeah,
Mihaela is going to be talking about today.
I would love some asset management clients.
She's going to tell you how to get them. You only
Yeah.
need one or two, and you're set for life, huh?
oh, yes. Plus, the minimum service agreement for asset management usually goes for 3 years.
Oh, that's nice. You don't have to worry about it for 3 years.
There's a little bit of, let's say, work, but as we all know, nothing beautiful and pretty comes easy.
Mm, right?
Amen.
They have to trust you, that's for sure.
Yep. I like your office, Carla.
Really? Oh, thank you. This is actually not, I have my bigger office is on the other side, but the internet is not working. This is like the little small crampy one.
Oh, it just looks like you're so professional.
Oh,
Got the little file cabinet in the back, and you're all
oh,
sitting sideways here. It looks good.
Yes,
Good.
yes, thank you. This is definitely a large asset. It's 142 apartment units.
Wow.
Mm-hmm.
Wow, that's a lot. Well, I guess we have 276, so it'd
Oh
be
my
like
gosh.
half of Edge Hill, but you probably have a lot
Mhm.
more, responsibilities. Because don't
Oh,
you collect rent and everything?
we do. But it's the same for Edge Hill because you still have to collect, you still do the HOA fees and
True.
yeah, it's all the same in nature.
All the same.
It's all the same. It's all a big
Uh,
headache.
yeah, yeah, dealing with those people.
That's you know what? It's mostly the people.
It is. I
Yeah,
know.
the paperwork, it just comes with it, but the personalities is the most difficult.
Yeah.
no, actually, there is a book. It's called, and you can find it on Amazon. It is called, hold on, I have it here on my desk. The job is easy, the people are not.
Yeah.
That's it. Oh, we may need to read that book.
It's on Amazon. It is actually, the author is a professor that she is a Romanian lady. I think
Mhm.
she's teaching MBA at Boston University.
Oh, I like it.
Yeah,
Mm.
very, very, let's say, not in the what would you expect lines as an MBA teacher. Very
Oh,
open-minded
okay.
and modern
Mhm.
teacher.
Well, we read a book a month, so I'll put that on the list for sure. Because don't no matter what industry you're in, you're always going to run into that people uh, piece.
Mhm.
I'll put it in the chat. Her name and the
Okay.
name of the
Thank
book.
you.
The job is easy. How is it?
I'm going to send out one more reminder and then we'll get started.
Mhm.
Hi, Scott.
How's it going?
Hey, how are you, man?
Good. It's been a while. How are you? Hi, Carla.
Great.
How are you?
Doing good.
Good.
All righty, so we'll go ahead and get started. Hello, everyone. Welcome. Today we do have an exciting special guest. Mihaela, she was with us, I don't know, back in 21, 22, that time frame. And since, well, I don't know, you came in as a property manager,
Yeah.
but since then, she has just blown up her business and she's gotten into an area called asset management. And I know that when we deal with properties in any kind, we are always one step away from another type of work in the area of real estate. So I just wanted to give everybody an opportunity to hear about that, let her share how she got into it, what it entails, and how you would get into it if that's something that you want to do. Um, we will start with Scott. We'll let you give your finance update, and then
Perfect.
we'll move right into Mihaela's presentation. So if you want to go ahead and start. Now,
Yeah.
does everybody in this room know everybody? I just want to give some introductions. If not, um, I guess. Mihaela, you can introduce yourself. We have Carla. Carla just came back to us. We're excited to have her back. She's also in property management, so a lot of crossing of lines. And then, of course, Scott, our wonderful lender, and then Chastity is at the bottom there. I think she's listening because she's got a lot going on today, but I'm so glad that she's here. The reason we have a smaller group today is because there is a conference in San Diego that a few of our agents are attending today. So I'm really happy that they are there. That's exactly where they need to be. And so we have a little bit smaller group, but still, I think the right people are in the room exactly the way it should be, exactly the way, it always works out the right way. So with that, I'm going to turn it over to you, Scott.
Awesome. Thank you very much. And Mihaela, good to see you again. So pretty light this week. As far as bonds, slow week for bonds, as we know. The Fed meeting is tomorrow. So we'll see what happens. If they do cut rates, it's expected to be a 1/4%, which, anything helps to stimulate the economy and get things moving forward. But as far as mortgage rates, we've seen a rally for the last week and a half or so leading up to tomorrow's meeting. So depending on what they do, if they cut rates, interest rates aren't just going to drop. We've already we mortgage bonds will go ahead of time when it comes to that Fed rate cut. If they do not cut rates, which is not expected, then mortgage rates will get worse and we'll see what's called deterioration. So it's pretty level right now, or has been for the last 2 days ahead of this meeting. So we'll see what happens, but the expected cut is a 1/4%. Right now, mortgage rates today, 6.25 on conventional, 5.25 on FHA. So looking really good. On a conventional loan with 5% down above 740 FICO, you can get a 5.99% rate. So they're definitely looking better. What I wanted to highlight this week is I got a new customer that was with Bank of America, and they went into our open house, and we got to talking. And Bank of America told them that they had to go with an FHA loan because they were a first-time buyer, and because they only had, one trade line or active trade line that had a balance on it. And no other accounts that had a balance. So with that comes experience. You only need one trade line on a conventional loan. So the borrower and I had a conversation, and he felt comfortable enough to provide me all of his documents. And I went through and did the application, and we compared FHA to conventional financing. For a first-time homebuyer, conventional financing, you can put down as little as 3%. So it's a half a percent lower than FHA. But if you have strong credit scores, that monthly mortgage insurance premium is lower than FHA. And you also avoid having to pay the upfront mortgage insurance, which saves that borrower thousands of dollars in finance costs. So I'm not saying FHA loans are bad. They're great loans. Sometimes they are needed because they allow for higher debt to income ratios. But as a first time home buyer, if you fit into the box for this conventional financing as a 3% down, it definitely can benefit you and save you a lot of money. So him and I had the conversation. I said, did the other person at least look into this or tried to do this for you, whatever? They just said, no, we can't do a conventional loan with you. And again, that probably comes down to experience, and that loan officer may not be familiar with that type of financing. So the loan officer that the client is working with should always be provided options, things to look over, not just the LO saying this is the loan that you have to get, because again, that may be what that company does the most of. That's maybe what they're only licensed to do, or it comes with the lack of experience. So always make sure that the customers you're working with are getting, if they're not working with me, make sure they are getting the different options that are available to them. And if something doesn't sound right, that's when he told me, he's like, oh, I have to do this. I'm like, something's not right there. I can't tell you yes or no, but I asked the questions and he gave me some basic details. And through that conversation, we built a relationship, and we opened escrow yesterday. And he's going to save, a bunch of money that he otherwise wouldn't have to do. And that's, these big box banks, B of A, Chase, Wells Fargo, US Bank, they are great at, checking, savings, CDs, these other type of investments. And I'm not saying every loan officer there is not good, but majority of them are what we call pencil pushers. They are getting that business because they're sitting inside the bank and someone in that bank is directing it to them. And they may not have as much experience or knowledge, or at the end of the day, they're getting a flat fee. They're going to take that application. It's going to be pushed on down the line. And once they're done with it, it's all said and done for them. So I would say experience is a big factor when moving forward with looking at those loan options. So just wanted to highlight that and what I experienced over this last week. And then I'll say for next week when Tanya's back, something that she had brought up last week, but I'll table that and save it for next week. But as always, if you need me for anything during the week, you can call me, text me, email me. If you have any open houses that you're planning, let me know. I'll help you prepare them, do flyers for you. If you give me enough advance notice, I am more than willing to come and sit at an open house for a little bit of time. And if you need any flyers or anything done, please don't hesitate to reach out to me. These are all resources and things that I can provide to you at no cost to you. So have a great rest of your day. And like I said, if you need me for anything, you have my cell number.
Thank you.
You're welcome. Bobby, you're muted.
Thank you.
Welcome.
Quick question. Would you also be able to provide the agents like little electronic versions of the rates and stuff for them to post on social media?
Yes, I actually just asked for a flyer update with kind of where mortgage rates are right now to have that as a share. But yes, I will send that.
Thank you.
Yep.
All right. Well, thank you so much.
Yep, you're welcome.
We'll be excited to hear what happens tomorrow.
Oh yeah.
All righty. Okay, well, Scott, you're welcome to stay, but you certainly don't have to. And
I'm gonna hang for about 15 more minutes. I have another thing at 12:30 that I couldn't push back, so I'm gonna hang tight for a little bit.
all right, thanks. So we'll go ahead and turn it over to you, Mihaela. Before we get started, I do want to give you one announcement. So in sorry, I just got a text. I wanted to give you some information. In December of this year, a change will be happening with FinCEN, having to do with escrow and reporting requirements. So in the past, if you had an investor buyer who was under an LLC or some sort of organization, they could purchase land or property using cash, and that would be, enough information to make that purchase. After December, any organization that purchases with cash is going to have to complete an additional set of documentation for escrow to disclose the officers in that organization. So this was put in place to try and stop organized crime from laundering money, and also these shell corporations to stop those from moving money around. So just to be careful when you're working, if you're working with any investors, up front, let them know that they will be required to fill out this additional documentation, just letting escrow know who the officers are of that organization. So I can see this, causing transactions to fall apart. So I just want my agents to know up front, if you're working with a cash buyer, just make sure that they know that they're going to have to disclose that information. Okay. That was what my title guy guest was going to provide that information to you and a little bit of background, but we'll have him on next week. I just wanted to give that information to you just so you have it. In case you hear something, oh yeah, that was that thing. All right. So with that, I will turn it over to you, Mihaela, and we're excited to hear about asset management. So with that, go ahead.
Yeah. So a little bit of a comment or piggybacking on what you just said is that, let's say, for instance, the company that I work for right now as operations and asset manager, we actually ask the investors, there is a specific form, is the scorecard and the presentation of the company, that if they want to do business with us, this is something that JLL was using it for years, just to protect ourselves, to not be accused of involvement in money laundering and also those sort of bad things. So don't get scared if you will ask that question, like Bobby said. Just put it in the form that, it's for everybody's safety. We don't want to, put any bad light on anybody. We want to create a healthy and genuine business relationship.
Mm-hmm.
And whoever has good intentions will have absolutely no problem.
Right.
Yeah.
Right.
So don't worry. It is a good practice in commercial industry to put a list with the officers in your company, to put a scorecard, to put, to verify the business. And, maybe in future we can talk about that, and I can introduce everybody about how to actually analyze investor, a company that wants to, or you want to bring them on board and be your clients. It's basically about protecting yourself.
Yeah. Okay, good. Well, we look forward to that.
I'll share my screen. Bobby, I sent you the presentation.
Mm-hmm. There you
Yeah.
go.
Yeah, okay. Can you see my screen?
Not yet. Go ahead and try and share it now. I just gave you permission.
Okay. Now share and share this. This.
Now it's coming.
Is that
There
okay?
you go.
Okay, and move a little bit some people here. Okay, so we will talk a little bit about what is asset management in commercial real estate industry. And probably everybody heard more or less about asset management. It sounds, sometimes it might sound fancy, sometimes it might sound complicated. How I got into asset management first is that obviously I started my career, and it's not that I don't like residential real estate, but I'm more into commercial. I feel more comfortable in commercial industry. And I've started my career as a property manager. I manage multiple apartment complexes. I was a regional for apartment complexes. Then I got into industry, into retail. I manage Westfield in Palm Desert. I manage the mall at the river in Rancho Mirage. I was part of a receivership account, meaning when a big company is defaulting and paying their monthly payments like Westfield, they go into a receivership account, we wrap together the property, we put it together and we sell it to new investors. It's basically like in residential flipping houses, but actually I flipped malls at, at a bigger stage, let's say a bigger scale. So I basically flipped malls and commercial properties. And then I discover, because of my passion for numbers, I discover asset management. Asset management means basically just, usually how you will explain something complicated to a little child is, what do you do as an asset manager or as an operation in asset management industry? I basically take care of the client and make sure the client makes money. That's one-on-one what you do as an asset manager. So I'm going to take you now through what means a little bit about asset management. So from a property management perspective, asset management involves the strategic oversight and optimization of real estate assets to enhance their value, performance, and return over time. Here's how it differs from and also complements property management. I'm assuming that everybody means what is the property management role, what is the scope of a property manager, okay? So key aspects of asset management in property management, we will have to take a look at strategic versus operational focus, because this is one of the basic difference in between asset and property management. As asset manager, you look at the high-level strategy, investment decisions, and long-term value creation. As a property manager, you basically take care of day-to-day operations, tenant relations, and building maintenance. So basically facility management, let's call it. These are two distinct but complementary functions of asset management and property management in commercial real estate operating, and different strategic levels. So now I'm going to break down a little bit the problem for you. Asset management is about strategic and financial focus. You have to look at the high-level oversight of real estate investment. So you have to look at the big numbers. Financial performance optimization, maximizing the net operating income. If in future you need a little bit of more knowledge or in depth about what is net operated income, what is internal rate of return, what is a property value, how to find a property value, I'm more than happy to, guide you through this adventure in understanding all these terms. Investment strategy and execution, you have to look at either the client, would you advise the client to buy more properties, to hold on the properties, to sell the property? So that's another decision that the client will come to you and look for advice. And you have to be prepared. And how you prepare for some sort of executive decisions, the same, I can train you. Portfolio management across multiple properties means diversity. So currently, let's say, for example, I manage schools, I manage retail, I manage warehouses, industrial. So everything comes under the same person. That means to be an asset operations manager, to be able to make the difference in between how much profit your client needs to make on the retail side of their locations versus on their, let's say, I also have a couple of homes, HOAs, on their HOAs, what means 3% profit in retail and what means 10% profit in HOA. It's a huge difference between when you're going to make 10% profit on a retail, you're a genius. I don't know, you just work magic. I don't know how you do it, but I've seen that very rarely. Then moving forward to capital allocation and major capital expenditure decisions, the same like I was talking about earlier, you need to understand what is the major capital of your client and advise the client. The client will come to you and ask you questions. Market positioning and competitive strategy. Obviously, you need to watch the competition and tell the client, hey, look, the mall across the street is doing this and that and things, and you always have to be in contact with, let's say, marketing department, sales department, a leasing department, with the leasing agents, with the property manager as well, with your financial manager, and so forth. So everybody, it is a team that you need to work with your team. It doesn't matter that you are the asset manager. You're equal to everybody and you're a team. Stakeholder reporting to investors, lenders, and ownership. So I have weekly meetings, just to give you a little bit of insight. I have weekly meetings with the client, and I report to their investors, because they're them at their own, and they have their own investors. So they ask questions. What is the strategy? What we do in the next 6 months, next year, next 2 years, and so forth. So you need to advise on the investors, on their investor side as well. Exit strategy and planning and disposition of properties. Let's say, for instance, right now I have a property in, I think it's in Carson, that one, that I needed to advise the client to decommission that property, disposition of the property. What do you do with a property that is not occupied? You still manage the property, you still offer as a as a full service, like Bobby has her company, property management, HOA, everything as a full service offering, property management and facility management company. You need to offer, you need to continue offering facility management. Of course, you renegotiate the facility management because it's not occupied anymore, the facility management contract, but you still need to offer facility management. Sometimes even big companies, sometimes we change the contract and we offer facility management at a very low rate. It's just complimentary. So now going on the other side of the page, looking at the property management. So from the property manager perspective, you look at the operational day-to-day focus. So you basically build up day-to-day client success. You look at the daily operations of individual properties. You look at the tenants' relationship, which is very important. If your client tenants are not happy, you lose business. Think about it in a retail shopping center or large shopping center. If you're losing a couple of clients, a couple of tenants, they will start talking to each other, and then you're going to be stuck only with the large ones like Macy's, JCP, JCPenney, Dick's Sporting Goods, and the big players, and that's it. The rest, your entire mall will be empty, because the little ones, as you know, like in property management in apartment complexes, people, they talk to each other and they will leave because they have like 1, 2, or 3 maximum years lease agreement, and that's it. After that, they leave. And once you start having empty spaces, that is going to affect your client success. So as a property manager, you have a very important role to hold the fort, keep the lights up for your client. Facility management, the same, maintenance, repairs, everything what means about facility management. Vendor coordination and contract management. As a property manager, you manage the vendors, rent collection and lease administration, and so for all the nice things about rent management. Building safety and compliance, preventive maintenance program, on-site staff management. Sometimes, not always, you don't necessarily need to have on-site management, as you know. For apartment complexes, if you have, I think it's less than 16 apartment complexes, you don't necessarily need to have a manager on site. Sometimes if the client has multiple shopping centers, they don't necessarily want to have a manager on site. They want to, just manage their buildings. They don't want to offer you a, let's say, a space on site. So just to kind of like make a little bit of a conclusion about everything what I just said, let's take a look at the aspects between asset management and property management. So the scope for asset management is portfolio and investment level. So basically make sure your client, like I said at the beginning, your client makes money, is successful. Property manager is taking care at the property at the individual property level. Timeline, long-term contracts like 3 to 10 years, representation agreement, master service agreement, what we call it, the MSA, versus short-term in property management. You look at the daily contracts when you have events in retail industry, or annual contracts for tenants, because you renew your tenants annually. And then as an asset manager, you need to stay focused on financials, and in property management, you need to stay focused on operational efficiency. And decisions as an asset, you decide on capital improvements. As a property manager, you decide on maintenance and leasing operations. So I hope I didn't confuse you more, but I'm available for questions. You're muted, Bobby.
Thank you so much. That was really enlightening. And I love the way that you kind of broke it down based on the focus, because I think that's probably one of the biggest differences in the two. So how would, well, I'll open it up for questions. Does anyone have any questions for Mihaela?
Are you going to send the PowerPoint presentation in email so that we can have a copy?
Yeah, I sent it to Bobby. Yeah, and she can
Yeah.
to everybody.
Forward it out.
Mm-hmm.
Okay. Well, I have a question. How would you, okay, so for somebody like Chastity, where she's got a portfolio of properties she manages, how would she break into, let's say, asset management for the first time?
What type of portfolio she has?
Pretty much residential, but she does have a couple of commercial.
Mhm.
They're all the commercial are owned by one person. So I'm thinking that, a proposal for asset management to him,
Mhm.
just, offering it and seeing what he says. I mean, it sounds like
Yeah.
there might be an opportunity there.
So usually how you transition from doing property management for a client to doing asset management for the client, what I usually do and how I approach, because I had properties like Cassidy where I was doing just property management for them. I would do financial analysis for that client and show them that I understand their numbers and I understand their goals. And I will show them, okay, from my perspective, I think kind of like give base as you and everybody knows, we need to give a lot for free to create trust, obviously valuable information. We have to have our client to trust our judgment.
Right.
First of all. So what I would start with, I will start crunching some numbers on how much it was spent on, let's say, common areas, how much was spent on capital improvements, how much was spent on long-term, short terms. I will send you, Bobby, I have another little bit of, let's say, presentation about what is the difference in between operations expenses, a return of investment, and all the nice, good stuff. And you can share with everybody. And I think the most important thing for the client is to prove the client that you paid attention to their dollar signs.
Mm-hmm.
That's one thing. Then secondarily, you need to show the client that you care about their properties and you want their properties to be in compliance with all the state and local rules about buildings.
Mm-hmm.
So do a very thorough inspections of the properties. Not that you want to kind of like break their hearts and tell them, hey, your properties are a hot mess, but you have to tell them a good place to improve is here. A good thing that we should look, change a little bit of perspective, even though, let's say sometimes I have an empty parking lot. I also have parking lots. So I literally have an empty parking lot that is not built up and the client doesn't know what to do because they have also the opportunity to change the zoning or not, to apply for zone changing. So at that point, how do you talk about an empty parking lot full of weeds to make money? So at that point, you literally take a lot of, like in real estate, residential, you do a market comparison. What can be done with that land?
Right.
How much money in perspective in the next 3 years, in the next 5, and in the next 10 years can generate for your client. You have to build up basically their business plan.
Mm-hmm.
Make a little bit of analysis about how much money they spent on utilities. Try to guide them through how to be more energy efficient.
Mm-hmm.
And show them, hey, you can save this much dollar amount. And there are so many websites where you can find calculations on how much money you can save if you convert from regular, let's say, fluorescent lights to LEDs in the parking lot.
Right.
And all this sort of good stuff. You can
Mhm.
also talk to, if she has commercial properties, talk to waste management companies and give you a calculation about how to improve the waste management. That's going to give them, a little bit of more compliance with the local regulations, and show them that they care about all the energy saving and all the recycling programs and things like that. Also look at let's say the building occupancy level from the beginning, all the way from the starting of the ownership, all the way to today's date. The
Mhm.
occupancy level, how much was the building occupied, how much money did you lose, how much money did you gain in comparison to the market, real estate, whatever happened, quarterly. Obviously you cannot go in that unless they will ask you, but I think quarterly or an annual analysis on profit and losses based on generated income, you can pull out.
Yeah.
So put a little bit of, let's say, financial profile for the client, put out for the client, present the client with how to be more energy efficient profile presentation, and how you can improve, your relationship with the city, with community. What I've noticed, usually commercial owners, they love being appreciated by city halls and city
Right.
authorities.
Mhm.
They're like, oh yeah, look, the city gave me whatever this placard. I am the most efficient energy saving, whatever, recycling building, and so on. So yeah, put a little bit of a presentation profile of potential how to improve the relationship with local authorities. And as you all know, in property management, once you get yourself on the right foot with the local authorities, you're set.
Yeah.
You're okay.
Well, it seems to me like this is a really a value added that I think even as a real estate agent or property manager, you can always add this little piece in. You can always add in, just do a little extra work. And I know that Chastity every year she sends out everybody's property value. She runs a CMA and says, hey, it's been a year. Here's where you're at value wise, and um, I think if you work with every client in that way, with that kind of mindset, what can I add this time when I'm communicating that's going to help them make a decision or save some money or, something like that. I think the lesson here is that, everybody can step it up. Everybody can add that little extra piece. Even if you don't want to go into asset management or anything like that, you can always add value to yourself by putting yourself into their shoes as an investor and say, what would I want to know about my property? What would I, in case I wanted to sell, I have the value in front of me, which I think is really great that she does that. There she is.
I'm multitasking and I'm a mess, but this is amazing. So I wanted to make sure to come on and
I know. Isn't this great? I love it.
sorry to play. Mahala, that was amazing. Thank you for the presentation. And I do have a couple questions if you're ready for them.
Yeah.
Okay, perfect. Did you create your own business structure, or do you have a business plan that comes from somewhere else?
I work for Jones Lang LaSalle.
Okay.
So we have, let's say, business structures that they're pre-established and pre-designed by lawyers.
Nice.
Yeah. I would always advise to have someone that knows the local law, the state law, because I'm licensed, I operate for JLL in both states, Nevada and California. And I've always advised to look for legal advice prior sending anything to your client.
Sure. Okay, that makes sense.
But I can help you out, you know, because obviously I've learned a lot, and you know, I can help out and, you know, guide you through the process and how you can do, you know, a pretty good presentation for the client. Obviously that will have to be run through Bobby,
Sure.
because I don't want to pull out absolutely not even a word out to any client unless the broker, whoever holds the broker license, approves it.
Of course, of course. Okay, so thank you for that, and thank you for offering to assist, because I'm sure if I do delve into this more, I will definitely need some hand holding in that area, because I don't even know where to begin.
Yeah, absolutely, absolutely. Yeah, yeah.
Then-
We, you know, we can talk about everything, and I'm always available for advice. I'm like Bobby, she knows me, and I'm a person that I think that's at one moment in my life, someone helped me, and one of the most important person is Bobby.
No,
And, she kind of like encouraged me in my madness. I'll put it this way, in a nice way. She always encouraged me to move forward, and she would always say, okay, Mihaela, how about that? Think about this, because she knows, and I'm telling you, and everybody should know that Bobby is the type of mentor that when you know that, or you feel that you cannot do it anymore, she will tell you, yes, move on, 5 more minutes, you can do it. She will always push you. So I trust her judgment, and I trust her, let's say, way to guide you.
absolutely.
Yeah.
I couldn't agree more with you. She's definitely
I stop it.
no.
Oh, seriously. Always when I would come up with an idea to you, you will be like, okay, let's see how we can do this. Let's see what we can come up with. You know, let's see what we can get out of this. So I think you cannot be successful and you cannot progress unless you have a million of failures and a million of errors.
Yeah,
Yeah, absolutely.
true, so true.
I do have another question, because it sounds like asset management is kind of geared more toward the commercial side of things, which definitely understandably so. However, what are your thoughts on it being the residential side and creating, so it would be new to me, but creating something, a program that is structured toward investors with residential income homes?
Mhm.
So any time when you manage more than 4 properties under the same investors, under the same owner, let's
Mhm.
say, you know, so I am Mihaela and I own 4 homes, single family homes. At that point, you can be considered, you are actually an asset manager, because from that perspective, you take care of that portfolio for that person. You make sure that he is profitable. This is what a lot of people, they don't understand. And that's why in large real estate companies, large commercial real estate companies, they have all these avenues for everybody. Everybody stays in their lanes. That's why, let's say, it might sound like, oh yeah, you're doing property management. I'm like, no, I'm not actually doing property management anymore. I'm doing asset management, because I'm strictly focused on generated income for my client. When you start staying focused on your client's profit, you become their asset manager. When your client comes to you and will ask you about what is my next step, should I buy or should I sell? At that point, you are their asset manager. You also need an asset management, a service agreement. It has a lot of legal implications. So you need to have a lot of due diligence, a lot of NDAs. For every single little step that you do, you need NDAs. You need a lot of due diligence. You need to be covered for every word that comes out of your mouth. I'm telling you from personal experience, you don't open your mouth, you don't advise without a contract. Never, ever. Ever. You can put out some statistics, some numbers, like I just told you earlier. You pull out some numbers, but everything is based on past facts, because you can be, a lot of times people, they can say, oh yeah, but you told me this and that. And I'll be like, yeah, I told you, because these are your numbers as of today. This is where you are as of today, because you came up to some conclusions that is, you know, I don't want to sound anyway rude, but that is on you. This is what I come out without having an MSA, a master service agreement for you as an asset manager. As a consultant asset manager, yeah, I can crunch up all the numbers in the wall for you, put together a very beautiful presentation. I can advise you what you can do, but I would never, ever tell you to do something unless we have an MSA service agreement. And when you have an MSA service agreement, a master service agreement for asset management, at that point, it becomes the part where how you get paid as an asset manager versus a property manager. A property manager, you know, you get paid based on square footage that you manage, or if you have apartment complexes, based on door numbers, or you get paid percentage out of whatever rent you collect and things like that.
What happened? Did we lose her?
Yeah, I can't hear her either.
We can't hear you. What happened? Ah,
And
there we go. Thank you.
so as an asset manager, how you get paid as an asset manager, you get percentage. How you get percentage? Out of what you get percentage as an asset manager? First of all, you manage all the contracts that they have, everything. You get anywhere in between 3 and 10%. It's whatever, how you negotiate it. It is negotiated based on the gross generated amount of business that they're generating. So obviously you can ask for 3% for, I don't know, shopping centers, but you can ask for 3% for someone that has 4, 5, 6 single homes, and then, I don't know, another mini apartment complex. Then you kind of look at 6, 7, 8% out of whatever is what you manage. So basically, as an asset manager, you get percentage out of everything you touch, out of everything you manage. I managed your utility bills. I get 3%, for example. Let's just, for the sake of example, let's keep 3%. I manage your utilities bills, and I make sure that you have energy saving stuff, all the good, beautiful things, you know. I manage your, let's say, all your capital projects or your CapEx, parking, roofing, I don't know, how you call it, repiping, replumbing, everything, you know, all the CapEx. Renewal and replacement of the HVAC system and everything. I get 3% out of every single contract that I sign for you. So I'm going to sign with Bobby. Bobby, she is, let's say, the asphalt company. I sign with Bobby a contract of, I don't know, let's say $50,000 to do all the parking lots for my client, for Cassidy clients, let's say. I get 3% out of that contract. That's the management fee. When you start asking the management fee, at that point, you are responsible for what comes out of your mouth. Realistically, everything what comes out of your mouth and everything what your client makes based on what you decide, then it's on you. That's why earlier I said, you don't move anything without your broker's authorization. Nothing. You don't advise on anything. You can crunch all the numbers in the world and put whatever is as of today back, a million years back. Crunch numbers, put together statistics, present with statistics, like you're doing with, this is your current value of your portfolio, current value of your properties. That's it. You stop there. Once you start asking for money for your knowledge, you become responsible. Yeah.
Wow. I love the way you put that together. It just makes it so clear. Right, Chaz?
Absolutely. Yes, thank you for that. You're
I
right.
feel like we need
Involved. You better have a contract.
yeah, I feel like our next step should be with the attorney.
Yeah, absolutely.
Anyway, I didn't mean to interrupt. Go ahead.
Yeah. Then another thing, let's say for instance, as broker for Bobby, Bobby has, I don't know, a person in the office. Well, she has someone that is like an assistant property manager for everything, because you offer property manager, facility management, I don't know, all sorts of services. So Bobby, let's say for instance, has 3 people in the office, or people that they're on payroll. You will have to include those people, that payroll dollar amount, into the service agreement. And then you get 3% out of the payroll, because the client reimburses you for payroll. Because let's say, for instance, Bobby has a person that she will designate it just for your business, for your portfolio, Chastity. And then that person gets paid whatever dollar amount per week, per hour. That amount must be included in the service agreement, because that is payroll. Payroll must be included in your service agreement as asset management.
Hmm.
You have a maintenance person that will offer maintenance for that portfolio. That payroll must be included in the master service agreement. And then you get 3% out of the payroll. That's your management fee. Because you advise, let's say, for instance, you will advise the maintenance technician to go at Home Depot and tell him, no, don't get the fluorescent regular light bulbs, get the LED light bulbs. So you manage the maintenance technician on how to do something that will fulfill what you advise the client, how to become more energy efficient. So anything that you kind of like spin the world, it's 3%, everything, or whatever is the dollar amount that you agree on.
I'm so sorry. We are running short on time. We have about 3 minutes left. We're a little actually over, but this has been so interesting. I did not want to cut you off.
No, it's so much to talk about it.
Yeah.
It is so much to talk about it. And as I said, now because I'm into financial side of business and to the operation side of business, I'm more than happy to start working with you again, Bobby. But
Yeah.
I'll work on the commercial side, and we can discuss about that. But I'm more than happy to, answer anybody's questions per
Well,
best of my knowledge.
I love this. This was such a great enriching discussion. So I will, if you're okay with it, I would like to share the presentation with everyone, and if everybody wants to have Mihaela back, then we can definitely have her back for part 2 of
Yeah.
this. But we'll go ahead and wrap it up here. Chaz, before we wrap up, did you have one more question?
No questions at all. Just thank you so much. I really appreciate your expertise in this area. And I would definitely love to get together again and maybe get some more knowledge, because I know this is just scratching the surface of what
Yes.
someone
Yeah.
can and should be doing.
Yeah.
And I see that Jasmine's here too. Jasmine, did you have any questions before we wrap up?
No, everything was pretty understandable. And then I'll look over the slides more, and as I get more into it, I'll definitely hit you up to another question.
Sounds good. Yeah, it was great. And it's so funny because these 2 ladies that are in the room today, Mihaela, they're the ones that I would say are most interested in property management. And I would say both of them are definitely have what it takes to become an asset manager. So I really hope that this gives you some stuff to think about, and that you both take it and use it to spur some other research and whatnot. So anyway, thank you all so much. I am so happy to see everybody, and we'll wrap it up, and we'll see you next week.
Yeah, absolutely. See you next week.
Thank you. Thank you so much.
Bye.
Bye.